Hello, good afternoon, and you're watching Market Fatafat on ET now with me, Vinny Motiwala, along with me, Cheryl D'Souza as well. Cheryl, a very good afternoon to you as well. Market seeming to have a good afternoon, actually a good day, right? We have not seen anything of a subduedness in the markets. Bit of a positive cue coming in from the markets this afternoon.
Absolutely, a very good afternoon to you. Markets transparent to be a very good afternoon for the Lal Street as well. We are holding on to good gains of about 0.5% or so. Now inching towards the day's highest point. At one point in time, we were trading high by about 0.8% or so. Talking about the benchmark indices, yes, holding on to good gains. Nifty is above the 19,500 mark. You have Sensex also holding on to good strength as of now. Let's take a look at what actually Nifty Bank is doing in trade today, because if you look at Nifty Bank, that's outperforming the benchmark indices. 0.7% uptick coming in for the Nifty Bank as we speak. You have the broader markets that are trading a bit subdued when you compare them to the benchmark indices, because mid-cap index is just trading with gains of almost 0.1% or so. So yes, today the broader markets are taking a bit easy, just a tad bit off the day's lowest point coming in for the mid-cap index. Talking about the advanced decline ratio, very much still tilted in the favor of the advances. If you look at the sectoral indices, you only have PSU Bank Index, Pharma as well as FMCG that are seeing mild bit of weakness. You have PSU Bank Index, that's the top sectoral loser. While on the flip side, and talking about the gaining end of the markets, you have Media, IT Index as well as Auto Index that are seeing good strength. So that's the way how the markets are looking like at this point in time. We need definitely good strength coming in for the benchmark indices as we speak.
Okay, that's how the market is looking like as of now. But let's get started with those individual stock movers in trade. And on the technical front, today we're joined by Kunal Bothra, while from the research team today we have Amakshi as well as Sheila joining in with us. A very good afternoon to all three of y'all. And let me start with the first stock that is in focus. Let's talk about Zomato. That one is in focus on the note that we have coming in from Morgan Stanley. Now, what Morgan Stanley says that they believe that the share price will rise relative to the country's index over the next 60 days. So they do have a positive outlook for Zomato over the next 60 days. They believe that Zomato has been surprising in terms of the profitability of the company in its core business, as well as driven by the improvement in both contribution margins, as well as for both when you compare it in the food delivery business, also that contribution margin is improving, as well as in the quick commerce business as well. Also, what they're saying is that platform fees that are implemented by Zomato have been well adopted across the user base and cities, and they see that Q2 as well as Q3 FY24 results will be addressing the concerns around stagnation in the MTUs growth, as well as overall strong performance and high valuation also is something that they're keeping an eye out on. But as of now, they do have a positive outlook coming in on Zomato, and that is why the stock is buzzing in trading almost at the day's point as of now, Cheryl.
All right, that is the view coming in from Morgan Stanley when it comes to Zomato. But Kunal, do you concur with their view? Do you see some more scope of good gains coming in, at least for Zomato?
Well, I definitely believe so. In fact, as we speak, the stock is just about to get into a breakout mode above its 52-week high. The previous high for the stock was around the 106 odd mark. So I believe that the stock should be in line of breaking past about those levels. Now, more importantly, you look at the last 3 months of price trajectory for Zomato. From the July lows, the stock was almost at 65, 70 odd rupees. Gradually it moved up hard to 90 plus mark, and now from 90 levels, the stock has inched back to the 3-digit levels. It's still a way off from its previous major highs for itself. I think 160 approximately is the previous major highs for Zomato, which means that the stock should try and gradually move up to those levels. From a very short-term play, that's for maybe another couple of weeks, I would look out for 120 as a potential target for Zomato.
All right, so that's the view coming in from Kunal when it comes to Zomato. But before I also talk about the QSR space and the likely beneficiary, why? Because of the World Cup that's kick-starting from today. Let's actually hear what Karan Taurani of Elara Securities have to say.
Companies will be a big beneficiary because of this incremental sales. The bigger delta has always been Jubilant, right? Because they've done well on delivery. They've always had the first mover advantage, the best in terms of efficiency and lead time, everything put together. But I think in the post-COVID era, things have changed significantly. I think Zomato, has kind of caught up as far as delivery is concerned. So which is why delivery is not a moat anymore for a Jubilant. There are other players like, Westlife, Sapphire, Devyani, who are also making the most of delivery because of Zomato as an aggregator. So I think this time around, you will not see pizza kind of, seeing a sharp increase in terms of consumption, because people can order other food also online apart from pizza. Nonetheless, I think pizza as a category is well suited for the larger groups, but Jubilant may not see this big positive impact of the World Cup this time around because in the competitive intensity in the pizza category is also very high. We've got many other players which have scaled up very well. So there's a lot of competition for Jubilant in the pizza category itself. So I think the bigger beneficiaries this time around will be Zomato, Devyani, Sapphire, followed by Jubilant in terms of pecking order. The other set of consumption companies that we see an uptake is the alcohol space. Specifically over here, the premium beer segment, because if you look at beer, it's more on-premise led. So I think close to 30% of beer volumes is consumed on-premise. So we believe that even beer volumes could move up by close to 7 to 8% in that particular month of World Cup. And this will again primarily benefit premium beer counterparts, like Bira, AB and Bev, Sad Miller, UBL also, Heineken also to a certain extent, but they don't have a larger market share in terms of premium beer. So they'll be the last in terms of picking order here.
And just in line with what Karan Tharani had to say, yes, you have the QSR space, all the stocks that are likely to benefit or get impacted from the World Cup, Cricket World Cup kick-starting today are on the radar. You have Jefferies that actually has come up with a note on all of these players where they are saying that they expect the companies to run World Cup specific promotions on match days, and this in order to tap the consumption boost. They are also saying the consumption spurt is evident in the flights and as well as hotel bookings. And fares have also shot up, especially on India match days. What they're saying is they're expecting a surge in the media activity in the coming weeks, and also there should be a negative impact on footfalls in movie theatres, the theme parks, as well as offline brick and mortar retailers. So QSR stocks, if you look at them, like Restaurants Brand Asia, Devyani International, Zomato, all of them are a buzz in today's trading session on back of the fact that you have the World Cup, Cricket World Cup that's kick-starting today. And apart from that, take a look at hotels as well. You have another note also that's come on in hotels, and we'll have someone talk about it shortly. But yes, all of these spaces are in focus on back of that Cricket World Cup kick-starting today.
Absolutely, surely all that excitement around the World Cup, around the QSR space and the buzz that has been coming in all these stocks as well. But let's also listen to Pankaj Tibrewal, the Senior Vice President and Fund Manager at Kotak Mutual Fund, in terms of his views that have come in on this discretionary consumption spend, the sector over there as well. What does he believe on that? Let's go across and listen in.
So there's a dichotomy at the ground level between consumption and B2B businesses. Our sense is that consumption around the second half of this year should start picking up, led by festive season as well as election spending. And don't forget that this time, the wedding dates in the second half are about 35, 36 days, which is one of the highest over the last 4-5 years. Many sectors in consumer discretionary would see a very significant pickup. We believe that you have to look consumption in three parts, divide India into three parts. India 1, which is about 15-20 crore people, India 2, which is another 20-25 crore people, and India 3, which is the remaining, which is the daily wages, the rural people, and so on and so forth. I think you have to position yourself in discretionary in India 1 and India 2, because that's where the aspirations are moving, and that's where the real consumption is happening. So we look consumption with a slightly different lens as far as discretionary is concerned. Many sectors appeal on that. So many franchises which have consolidated over the last 2-3 years, valuations have moderated. Probably our bias towards them will be positive as we speak from a 3-year, 5-year perspective. And we would look to own some of those names as you move ahead.
All right, so that's the view coming in from Pankaj Tibrewal. But let's move on from the consumption theme, QSR space, and let's dive into the NBFC space. And Vamakshi, who better than you to talk about the NBFC space? LNG Finance, why is this one in focus?
Well, Cheryl, this counter is in focus on the back of its Q2 update that just came in this morning. Retail loan book stood at 69,400 odd crores, an uptick of almost 33% on a year-on-year basis is what the company noted. The company is also focusing towards retailization of the portfolio, and it is now estimated to reach almost 88%, which is well ahead of its Lakshya 2026 goal of over 80% retailization. Apart from that, when we only talk about the retail disbursements, they have increased by almost 32% on a year-on-year basis to 13,490 odd crores. In fact, we also have a brokerage note that has come in from Morgan Stanley, and they have highlighted highlighted the same. They do say that retail loan book has continued to scale up in the second quarter. The disbursements also look quite robust for LNG Financial Holdings, and in fact, the retailization of the loan book as the retail loan book for them continues to grow on track. They will, however, be keeping an eye out for details about the margins, the credit cost, as well as the asset quality. But as of now, the stock is reacting quite positively to the Q2 update that has come in, and as of now, the stock is up nearly 2%.
On to the next stock that is in focus, and today seeing a sharp jump up, and that is Good Luck Ashesha. What is the news flow here? Why is this one in focus?
Well, yes, the stock is surging in trade today at the highest point of the day as we speak. It is up nearly 15%, and this is on the back of several news pieces. One, that the company has forayed into defense. The company said that they are set to expand its defense and aerospace play through a wholly owned subsidiary. They've also raised funds. They've raised about 96 crores through preferential issue. As far as their aerospace and defense play is concerned, the company also said that they would offer forged machinery products manufactured for use in defense as well as aerospace industries. Apart from this, we did speak to the management earlier in the day, where the management said that they are looking at 3,500 crores of revenue in the current financial year, about 4,200 crores of revenue in FY25 and 5,000 crores revenue in FY26. So solid guidance coming in from the management. They also expect margins to expand from here on. So solid commentary coming in from the management. The company is foraying into defense, and on the back of this news that has come in, the stock is surging in trade today, 15% higher in trade as we speak.
All right, so that is Good Luck India, that is in focus. But Kunal, coming to you, RR Kabul, that's the counter that you're tracking for us, and isn't it one of the recently listed counters?
I am surprised that Kunal has picked up this stock right now.
Yeah, I think, but given the glut in the market in respect to the number of stocks which are moving up higher, it makes a lot of sense to even look at these new listing names. Now, the idea over here for discussing RR Kabul is the recent rally in the last 4 or 5 days. The stock moving up from 1200 to now 1500 plus mark. There was a mild bit of a pause 2 days back, I think yesterday and day before, where the stock corrected some 70-80 points. But then today's recovery as well as the price movement indicates that this could be a decent short-term uptrend kind of a stock even from current levels. I would expect that possibly in the next maybe 1 or 2 weeks, the stock may try and inch back towards the 1700 mark as well. So looking at the last 200 points recovery, I believe possibly another 200 points could be in the offing from a very short-term play.
All right, for all of our viewers who are watching Market Fatafat and who also watch Buy Now Sell Now, you all know the next query that you all can ask Kunal is definitely about RR Kabul, one of the recent listed counters. Which
and very rare views that come in from Kunal on any recently listed IPOs. So
absolutely.
Something to watch out for, and that's the view from Kunal there. But let's keep it going then with the other stock that we're going to talk about actually is Marico. And why is Marico in focus? Because of its Q2 update. When you look at it, this is the first FMCG company that has come out with its Q2 update and signaling a bit of a subduedness when you look at it in terms of the rural recovery. Everyone was expecting the rural recovery. Now Marico is the first one to highlight that maybe a bit of a subduedness is seen in terms of the rural recovery. It's not as much as what everyone was expecting it to be. Consolidated revenues for Marico is expected to be a bit marginally lower on a year-on-year basis. Revenue dragged by the pricing correction. Obviously that effect is now going in, which was the pricing actions that the company had taken. So pricing correction is something that is impacting and dragging the revenues. Below monsoon normal impacting the rural demand. So that's a concern that comes in as well. But domestic volume growth is expected to be in low single digits for the whole year on a year-on-year basis, I beg your pardon, as well as in terms of the coconut oil business, that's parachute coconut oil, edible oil, or even when you talk about in terms of the value-added hair oil, that's also expected to be in terms of a low single-digit volume growth. So weakness in volume growth, and that's something that everyone is watching out for. So not great in terms of an update that has come in. We're not expecting some sharp bump up here, but that is why the stock is down and out in trade as well. 4.5% downtick that you're seeing for Marico.
All right, moving on, Kunal, let's talk about Wonderla. How is this one looking on the charts? Because you definitely had Jeffrey's flag of the fact that the theme parks won't do well, given the fact that you have this cricket fervor, everyone's going to stay at home or go outside and watch matches and not, in fact, go to theme parks. But Wonderla is featuring on your list. Technicals are indicating something else altogether?
Absolutely, unfortunately not a new listing. The stock has been around over the last 8-9 years from 2014 onwards. Now, interestingly in the last 1 year, so I'll look at this from 2022 in the month of April, May somewhere, the stock bottomed out at 240 levels, and from there it's almost seen a consistent price uptrend, quarter on quarter. The stock is now almost at 760 plus marks, which means closer to that 800 levels. Even the last 4 or 5 months, I think 6 to 7 months have been positive for the stock on a consistent basis. The volumes have looked very strong. So it looks like that the stock is going through a very fine uptrend. And even from a short-term trend, I believe that the stock can see a potential upside further from current levels. Now, the next level of retracement resistances or extension resistances come closer to 800, 825 odd zone for Wonderla, which means even from a short-term trading play, there could be a potential upside of another 8 to 10%.
Alright, so that's Wonderla for you. That is in focus, and that's the rationale coming in from Kunal on that particular counter. But let's shift focus and let's talk about Pseudo Finance, because that particular counter is in focus in today's trading session. The stock has actually seen a sharp jump. Approximately 8% is what it had jumped last time I checked. Right now it's trading higher by about 6% or so. The company gave a Q2 update, the provisional update, and they said that the provisional gross advances rose about 29% on a year-on-year basis, while the provisional disbursements actually jumped 43% on a year-on-year basis. They've also said that their provisional total deposits for Q2 saw a rise of above 52% on a year-on-year basis. So on back of this positive, very healthy Q2 operational performance, you can see the stock seeing a good up move in today's trading session. Approximately 8% is what it logged in at one point in time. Now it's trading higher by about 6% as we speak.
Let's move on, talk about another Q2 update that is coming today, and that is from Macrotech developers. Vamakshi, how was the update looking like? What is the stock doing currently?
Well, Vinny, the update looks quite strong from Macrotech developers, and as you can see, the stock had reacted positively to it initially, but now it has actually declined and still is in fact trading in the green with a gain of around 0.7%. And let me quickly take you through that update. In fact, in the second quarter, when you look at the pre-sales, that stand at around 3,530 odd crores, an uptick of almost 12% on a year-on-year basis is what the company has noted this time around. And keep in mind that this is the best ever quarterly sales performance that the company has posted. In fact, in the first half itself, they managed to achieve sales of nearly 6,900 crores. Now, this is against an FY24 guidance of almost 14,500 crores. So if we look at it, they managed to attain nearly 48% of their sales guidance already. Collections also look quite robust at this point of time. In the second quarter, collections stood at 2,750 odd crores, an uptick of almost 16% is what they've noted on a year-on-year basis. They added 2 new projects with a saleable area of nearly 2,300 crore gross development value, and in fact, with this, in fact, they have achieved nearly more than 80% of its FY24 guidance. They've also managed to reduce their net debt. So all in all, it seems like a good update from Macrotech developers, and that is the reason why the stock is in focus as of now.
All right, moving on then, Ashesha, another one with the Q2 update, and that is IEX.
The stock is in focus on the back of its operational updates. The stock is gaining in trade. So it has achieved overall volumes of about 9,147 MU, which is an uptick of about 13% on a year-on-year basis. Real-time market volume, meanwhile, has also seen an uptick of 33% on a year-on-year basis. Strong operational data, and that is the reason the stock is holding up with gains of over 2%. Meanwhile, management commentary has also come in. They said demand momentum witnessed in August continued in September as well, and average market clearing price came in at 6.23 rupees per unit, an increase of 11% YOY. So strong data. The stock is holding up 2.2% higher in trade as we speak.
Let's move on to the next stock that is in focus, and this is on the back of technicals. We have LT Foods, Kunal. Look at the up move that we've already seen in the stock in the last 6 months or even 1 year and last couple of years. Also, the trend has been quite positive, and the good returns is what we've already gotten from LT Foods. How much more upside can we expect here, or do you think now, one should actually start booking profits given that we've already seen such a huge run up in the last couple of years?
So I think it's been an interesting last 9 months, 10 months for LT Foods. Of course, prior to that also the stock has performed exceptionally well from 100 or sub 100. The stock had moved up to 180. Now the reason for flagging of the stock is it's forming a bullish flag pattern on the daily chart. So which means from the July highs of 180, the stock had gone to a gradual correction closer to that 155, 160 odd mark, which was hit I think in the previous month of September. And now the stock is getting in line of a breakout above 170 plus mark for itself, which means it's trying to get trying to complete this bullish flag pattern. This could be a interesting a change of events for the stock price. It had already done exceptionally well from the 100 lows or sub 100 lows start of this year towards 180 mark, then a consolidation as well as a price correction, and now looks set for another round of a breakout. So I believe in this leg of a breakout, the stock should scale past above that 180-90 mark for itself. So 200 plus could be a target which I would keep an eye on for LT Foods.
Surely keeping an eye out on LT Foods over there. But let's talk about Bandhan Bank. Bandhan Bank is also in focus on the back of its Q2 updates. When you look at it, the bank has managed to deliver in terms of the growth and deposit growth, which is matching the loan growth as well. But what is interesting that has actually come in for Bandhan Bank in terms of credit growth, the guidance it given was around 20%. So the credit growth seems to be slightly below that. So that is something that they're watching out for. But advances otherwise, we have seen a year-on-year basis 12% growth in terms of the advances over there, as well as the deposits at also seeing a growth of around 13%. Retail deposits also have risen by 13% as well on a year-on-year basis, and CASA ratio is improving as well. So let's keep an eye out on this one. Just that in terms of the credit growth guidance that I've spoken for the whole year is 20%. Will that actually be achieved is something that everyone is bothered about. So let's keep an eye out on Bandhan Bank today downward, almost with cuts of 1% as of now.
All right, so that is Bandhan Bank for you, another stock that is in focus in back of its actually update. But let's talk about a stock that is not in focus on back of its quarterly update, and that is Sheila Phone, because that particular counter actually is languishing near its 4-month low levels. The company has actually received a GST notice, and for about $2.4 million is what the notice is coming from GST. It's about 20.26 crore rupees. So on back of that particular development, you saw the company, actually the stock price actually languishing in today's trading session, trading low by about 1.7% or so. The company is saying that the notice alleges wrongly availed transactional input credit and other input tax credit of GST. So that's the latest that's coming in Sheila Phone, and you can see the stock is actually declining in trade today.
Okay, that is Sheila Phone for you all. But on that note, viewers, we're going to sip into a very short break. Don't go anywhere. We'll be back with more stocks after this break.
Tip check.